So just exactly the same as Brexit, we've seen some absolutely huge moves in markets. This is what happens when markets are just not positioned for an event, and we've seen some very sharp and very aggressive moves coming from various asset classes as well. We went into today expecting about a 5 to 10% probability of a Republican clean sweep, or at least that was the model probability that we were seeing coming from various investment bank playbooks. What we're seeing is the reality is it looks like we're going to see a Republican clean sweep. Now that may be positive for people who like Donald Trump. It means some of his more unconventional policies will make it through Congress. But financial markets don't like this situation at all. They were not positioned for this. They were positioned for Clinton to take the Oval Office. They were positioned for a split Congress. They were not expecting a clean sweep to come through. Markets want to understand just how Janet Yellen interacts with Donald Trump now. We don't expect necessarily Donald Trump to sack the Federal Reserve. We don't think that would be good for financial markets and therefore good for the economy. But we still need financial markets to wear a higher risk premium because we could see the Federal Reserve slightly more politicised. What's Donald Trump's relationship going to be with emerging markets? We know a lot of economies are growing sub-trend. What will protectionist measures do for growth around the world? And these are the questions that traders and investors want. We're not going to get that clarity for any time soon. And of course, in this situation, when markets are not positioned for this, we don't have any clarity of thought. What do people do? They buy risk safe haven assets. You get gold. We've seen gold up $46 today. US Treasury yields are down about 12 basis points. People are going into Bitcoin as well. We're seeing some good gains there as well. But if you look at Dow futures at one stage down about 700 odd points, the Asian markets are getting clobbered. We're seeing dollar yen moving down very sharply. In fact, there's been a huge bid in the Swiss franc and specifically that of the Japanese yen. People love the Japanese yen in these times of risk aversion because it has a sizable current account surplus. The money repatriates back to Japan and people are buying the perception of capital flows back to Japan. That's what we're seeing there. So there's a lot of questions being asked by markets what this all means, and there's just not a lot of answers coming through. Until we understand his relationship with the Fed and emerging markets, we are going to see volatility to increase and people just not expecting this situation at all. So very much risk aversion coming through Asia. We're going to see European markets absolutely savaged and open this morning.